How to structure your personal credit for maximum funding. Now, why am I qualified to talk about this? The reason why is because I have 12 personal credit cards with a 770 FICO score. And the only reason I'm not quite at an 800 credit score yet is because I have 12 revolving lines of credit and I only have one real estate loan and one closed car loan, which basically doesn't count anymore. 8 out of 12 of my credit cards are 2 years or less in age, which is also not helping. So basically I have a credit mix issue and I also have an age of credit issue. But nonetheless, once you're over a 760, you're pretty much getting approved for any credit card that you desire and you're getting the best rates for any kind of loan that you wish to have. So first, let's talk about what makes up your credit score. So FICO credit score is broken up into basically 5 buckets. And all of these buckets are weighed at different rates. 35% of your FICO score is made up by your payment history. This means that even if you have 1 or 2 credit cards, as long as they start to age out and you never have a late payment, you're probably going to have an incredible credit because it makes up the highest portion of your FICO score. The next biggest portion of your FICO score is made up by amounts owed, which is 30% of your FICO score. So this essentially means utilization. You want to keep this utilization under 10%. A lot of people say that you want to keep your utilization under 30%, but honestly, of the clients that I've worked with, when they have between 10 and 30% utilization, it's pretty much a 50-50 chance that they're going to get approved for some kind of credit product. While when you have under 10% utilization, the chances go up significantly. So what do I mean by this? Let's say that you have a $10,000 credit limit. If you have just $1,000 being used, you're already at a 10% credit utilization. You don't want to go more than that after the closing date of your credit card. Or credit cards, plural. Personally, I think if you have the money, I would pay off all of your personal credit cards in full. Now, if you have a $10,000 limit and you use $3,000 of your utilization, well, now you're at a 30% utilization, and now it's going to really impact your credit score. So some things to do to lower your utilization is 1, try to have a higher limit for credit. So in that scenario, let's say that person had a $3,000 utilization. Well, if they had a $30,000 limit, well, now they would be at a 10% utilization. So you want to try to aim for a little bit higher. Personally, I think anything from $30,000 to about $75,000, $80,000 of a personal credit limit is perfect. A lot of people say that you don't want to go over $75,000. I don't personally agree with that because they say that if you have too much revolving credit or too much comparable credit, that you're going to start to get denied for new credit on the business side or even on the personal side. Again, I don't think this is true. What I think is what happens when those type of people get denied for having too much comparable credit. I just think that the cards that they have or the revolving lines that they have are a little bit too new. So you want to have your cards or your credit products age out and you want to show some payment history, then I don't think the limit actually really matters. So it's better to have a higher limit than a lower limit. Number 3, length of credit history. So I was touching on this a little bit in the previous when I was talking about utilization. Length of credit history is important. It makes up 15% of your FICO score. But unfortunately, there is not much that we can do about making this better. We just have to have our credit products open for a long period of time, make our payments on time for them, make sure we're not late, and your average age of credit is going to go up. Remember, the more brand new credit products that you open, the more your average age of credit is going to be anchored down. So in my scenario, what happened with me, I started learning about credit really in depth about 2 years ago. And what happened was I went from 4 credit cards to 12 credit cards in the last 2 years. So it really anchored my average age of credit down because my oldest card is from 2015. I'm personally 27, so I got that card at 18 years old. Then it took me 2 or 3 years to get the next card. I got that one in 2018. And I think in that year, I got another 2 credit cards. And then since then, I basically have not gotten a single other credit card until January of 2022, which is when I really started going crazy and I got all the other 8 cards within the last 2 years. So because of all that, my average age of credit is only a little bit over 2 years now. So that's really hurting my FICO score. So the fact that I'm at a 770 probably could have been at an 800 if I didn't get so many credit cards, but I had my own reasons. And when they start to age out, my credit score is going to start to go up over time anyway, so it's fine. The next category is your credit mix. So this is what I talked about before. Personally, I have 12 revolving lines of credit, but a good way to have a good credit mix is if you have some revolving lines of credit, if you have a installment loan, like a car loan, maybe a student loan, real estate loan, and all of these things as they age and as you have more of them is going to add to your credit mix. Now, obviously you don't want to over leverage yourself and you don't want to start getting a bunch of credit products and have a credit mix just to make up that credit mix. Over leveraging yourself and getting these things that you don't really need. So I personally wouldn't pay too much attention to that. Get the products as you need them. That's it. And the last bucket is new credit, which makes up 10% of your FICO score. Now this one's a little bit of a catch-22 because when you get new credit, it's obviously anchoring your age down, and your age is 15% of your FICO score. So it's like, it's hurting your FICO score in one way and then helping it in another way. But when your average age of accounts, let's say you have 10 accounts that are all 10 plus years old and then you get one new credit card, well, what's gonna happen is it's actually gonna help you a lot more than hurt you because you haven't gotten a credit product in a long time. And since there's 10 credit products that have 10 years plus of history, the anchoring is happening up rather than down. It's barely going to bring your average age down in that scenario. Now, the next thing that we have to talk about that a lot of you guys will just get a little bit down in the dumps about is negative marks on your credit report. So let's go over all of the bad marks that you could have on your credit report. Too many inquiries is one. When you have just a few inquiries, 2, 3 in the last 6 months, not that big of a deal. When you have had 20 in the last 6 months, very big deal. It could be bringing down your score by 20, 30 points. So you want to watch out for having too many inquiries on your credit report. There are ways to remove them. Next is late payments. Late payments are notoriously difficult to remove. You do not want to have them. And I'm going to go over in the next section the best habits and automations to set up to avoid late payments and other derogatories. Another really annoying thing about late payments is, let's say you have a credit card account open for 3 years, you've been paying it on time, but you're making manual payments. Every single time you have a balance, you have to manually go in there and pay that card down. 3 years of great payment history. Now you have one missed payment. You just forgot to pay it one time. You stopped using the card. Maybe you got another new credit card and you stopped using this one, but you had a small balance on it. You missed the payment. So now you have that one bad payment. That late payment can bring down your score significantly. I'm talking about 30, 40 points. Because remember, what did we say was the most important thing that makes up your credit score or your FICO score? That was payment history. 35% of it is payment history. So if you have a late payment, it's going to bring you down significantly. The next negative mark that you could potentially have is a collection or a charge-off. Now, these things sound similar and they are somewhat similar, but they are different as well. A collection account is when your creditor has not received certain payments from you. You owe them a certain amount of debt, and what they do is they sell that debt to a collection agency at a fraction of the amount. So let's say you owe them $1,000 and they turn around and sell your account as a collection to a collections agency for $300. So they took the loss, but they were able to recoup $300, and now you owe that $1,000 to the collection agency. You don't want to pay those, by the way. And the reason why you don't want to pay those is because they're going to stay on your credit report whether you pay them off or not. You might as well dispute the account altogether. And if you need help with doing anything like that, or removing a bankruptcy, or removing any kind of derogatory or negative mark, hit the link below and book a call with a member of my team and we can help you out. If you prefer to do it yourself, then we're going to have a few credit repair videos coming out soon on this channel. So subscribe and hit the bell notification to be notified when we do. Now, getting back to the video, a charge-off is a little bit different. This is when your creditor charges off this debt as bad debt. So it's a little bit worse than a collection because now it's just your creditor saying that, hey, this debt is uncollectible. They didn't sell it to a collections agency. It's a full loss for them. So it actually looks much worse on your credit report than a collections account. Now, the next bad mark that you can have on your credit report is a public record, specifically a bankruptcy. Now, we all know what a bankruptcy is. It's when you are in financial ruin, you have multiple debts that you can't pay off, you go to court, you get all your debt discharged, and you start with a clean slate. The only problem is that it's now in the public record and it's on your credit report, significantly brings down your credit score, and it makes it very, very, very hard for you to secure any kind of credit. And what's even worse is that this thing lasts on your credit report for 10 years. It lasts longer than any other bad mark or what could be taken as a bad mark can. A collection account only stays on your credit report for 7 years, which is also pretty long, but a bankruptcy is much longer than that. Inquiry, only 2 years. So here are the best habits and automations to set up so that you avoid any kind of derogatories or mistakes on your credit report. So in order to avoid late payments, which are probably the worst and most annoying thing to get on your credit report. And it's the actual one thing that you can do by mistake, just forgetting to pay one of your bills, it happens sometimes to the best of us, that could drop your score significantly. And the reason why I say it's a mistake is that when you get a collection account or a charge off, it's probably not a mistake. You're either just not paying attention to the creditor for a very long period of time on purpose, or you just don't have the money to pay that debt back. But with a late payment, even the best of us can forget to pay a creditor. So what I personally do to avoid this is I set up for a minimum payment and automatic payment on every single one of my credit cards. Just set it up, forget it. If you forget to pay off one of your bills in full 1 month, and you usually like to pay everything off in full, just set it to the minimum payment. Yes, you may have a small finance charge that may hit your credit account. Just give a call to the bank, tell them, hey, can you waive the fee? They'll remove the finance charge and pay the thing down in full, and you were able to save yourself a late payment just by having the automation set up. Next, there are a few things you want to do to avoid a ton of inquiries. Number one is when you're getting denied for a credit product, don't keep applying for it. Wait it out. Let your average age of credit grow. Have some more payments. You don't want to keep applying for a product that denied you over and over again, because they're going to keep pulling your credit report and giving you new inquiries. If you got to know, especially from this specific creditor, let's call it Chase Bank, and you applied for a credit card, they told you no. Well, Chase likes to give you inquiries for absolutely everything. So if you apply for a credit product and they told you no, let's say for a Chase Freedom Unlimited credit card, and then you apply again the next week and the week after that, well, you're gonna keep getting your Experian pulled over and over again. When you have more than 3 inquiries within 6 months, it's going to be hard to get approved for any other credit. So while Chase may have denied you, maybe you have a relationship with a different bank, let's call it HSBC, and you wanted to apply for a card over there. They could have approved you, but you have all these inquiries racked up with Chase, for example. So you want to avoid that. Next, when you're trying to buy a car, what happens is in car dealerships, they like to shop your credit. So what happens is you think you're applying for one loan, but what they're really trying to do is get you the best rate possible. So they start shopping your credit, and they'll pull your credit maybe 10, 15 times. Some I've seen even more than that, in order to get you the best rate. So you want to avoid that happening. What I recommend is you yourself apply for the auto loan. Do not let the dealership do it. You do it, and that way you'll get the one approval. Maybe you can shop around and get a second opinion or get a second bank to pull your credit just to have some comparisons in terms of interest rates. But I would not let the dealership shop my credit 10, 15 times. Now, avoiding a collection or a charge-off. If you do not have the money to pay your creditor, it happens. I understand. Pay your minimum balances. Do not let things go into collections and charge-offs. If you want to make a deal with the creditor, it's better to call ahead and say, hey, I don't have the money. I'm going to be making minimum payments. I'm having a hardship financially. Can we do something? Can you give me some kind of easier repayment option, lower repayment option, lower the interest rate, work out some kind of deal with me? Maybe you could even work something out where they discharge a portion of the debt and then you can do a debt settlement agreement with them. That's much better than letting something go into charge-off or collections. Because trust me, the bank wants their money. So if you're at least offering them a portion of their money or a way to get back their entire amount, but just at a better rate or working the thing out with you, they will do it. They will go for it. Now, the last thing you want to do to structure your personal credit for maximum funding, and this one is a little bit of a catch-22, is you want to have at least $30,000 in comparable credit. When you have $30,000 in comparable credit and then you have some age tacked on with that $30,000 comparable credit, let's say 2, 3, 4, 5 years of average age of accounts, you are golden. You're pretty much going to get approved for everything. Your FICO score is going to be incredible, assuming you don't have any derogatories and don't miss your payments. And there's a good chance that that $30,000 plus in credit limit is split amongst a few different credit card accounts, probably across a few different banks, which means you're building relationships with multiple banks. And that's a really good thing for you. So if you like this video and you want to see more like it, give me a like and drop a comment in the comment section about anything new that you've learned. Also, if you want to book a call with me and my team so that we can help you fix or build your credit profile, hit the link below and book a call today. Thank you for watching.